Okay, cool. So what I was talking about was being able to understand the lingo of what people are looking for, right? Like we're not even going to know what to search for if we haven't heard the words in the beginning anyway. So like when you first jumped into trading, you had no clue what technical or fundamental or any of that meant. Well, like once you kind of get the basics through reading those books like Technical Analysis for Dummies and then like the ones I posted on my profile, you can understand like what you need to be looking for in terms of indicators or whatever. So once I used those books to understand the vocabulary, I then went to research. All right, well, what videos can I watch on indicators, RSI, MACD? What can what is it that I can be looking for? And so it kind of led me to Finviz, which is just like, I've gone over this a couple of times, but Finviz is basically where you can see the market, like just big picture right here, right? So if you look at this little heat map right here, it'll tell you what sectors are kind of bleeding or industries. And some days this whole thing is completely red, right? And on days like that, I love it because it's like, take your pick, right? Like just come in and whatever sector you want, just go ahead and drop on in it and see if there's an opportunity, right? But as long as this is green, that just means that like, I'm being patient, right? If anything, I'm just kind of waiting for this to be over so I can kind of, catch some puts on some of this exhaustion. But what we see here is big picture in terms of breaking these indexes down to a graph as well as candles. So had you seen this on Sunday, you would have seen this bar right here. So if we would have had class yesterday, you would have been able to see today's breakout, right? Because yesterday it was just this bar, but what you can see is we're breaking over these lines of past resistances, right? And like I said, whenever you're starting to break over resistance, that's a strong sign. Like today, as Apple was approaching 130, that's like the equivalent of doing this, right? So it's pressing. And what I was doing was trying to buy a put in these little moments right here. So it worked for the moment, but I had stop losses on it just so like anytime Apple decided to go back up, I would let it go, because what I did notice is that we were pressing towards 130. Now Apple's in the NASDAQ as well as the S&P. So you're going to be able to see the same movement that, Apple did in these charts, right? So like I said, we were here. Once you're breaking over these levels of old resistance, right, then you get more bullish momentum, which made today, where we just completely exploded out of this area. And even on the Dow even had a good day, just simply because, one, it fell from here, right? And now that we reached back up to this level, well, you just break through it. And all of us had a good day in terms of the indexes. But I found Finviz by just Google searching different types of indicators and screeners. And then you just kind of go down this rabbit hole of vocabulary, right? So once I dropped onto, and now actually what I'll do is I'll create like a whole YouTube page of videos that help me, because I still have the links to a lot of those videos. So the link I sent to you all earlier, it includes just like a page where I'll kind of run it like a blog. So I'll take the videos from these classes and then dissect them with the information that's in them. But in addition to that, I'll post also the resources that I use, like Finviz, bar chart, and high shorts. Don't let me forget to mention high shorts, okay? But for now, we're going to talk about Finviz. Finviz is mainly known for its screeners. Okay, all of these are technically screeners. Like these are screeners that are either a signal of a position, right? Like if you trade trend line support, trend line resistance, right? If you trade these types of things, it will give you the tickers to look at, right? So trend line support, you can come in here and you can find, it'll already do the trends for you, right? So in this case, in this particular one, you can see that it's breaking that blue line of support on its little trend. So that's the one thing that I love about Finviz. If you're having hard time charting, come here and take a look at what it's got, right? You can type in whatever ticker you want and it'll pull it up, right? But this is where you come to get a big picture of all the sectors, industries, indexes, all of that here. And if you trade different types of signal positions, or like I said, I like oversold. I don't know if they have one for it, but you can go under the screener and do that. But overbought situations, obviously these types of situations, you're looking for a continuation, right, in an uptrend, or if you like puts, you can come to look at these in these overbought types of situations, right, as well as unusual volume. And then these top losers, this is where you're going to see, okay, where can we catch these falling knives, right? These aren't always going to be the best companies, but essentially they are opportunities where things have hit new lows, right? So where they were once hot, like AMC is over here. What is for? Oh, most active, right? So you've got your most active AMC right now. I think AFC is crazy, but it's fun to trade because even though it does take a little bit of money, it does have a lot of bit of action because of this volume. So it's going to be extremely volatile, but there's some money to be made and some money to be lost if you don't know what you're doing. So, but I watch these YouTube videos on screeners. Now, how did I get this ad off? Okay, here we go. So I watched this YouTube video on screeners. And so they come in, and let me do this really quick. So this was one of them. But what messed me up on this one was that it had too many criteria, right? And it was like limiting me on what I could find. And this, I think, was called the bouncy ball one. So the change right there, the reason why it was called the bouncy ball, because it's a change as an up, right? That means that this has opened up, or you can select down. Like if you want something that fell even more. And like I said, when we're going into an open, I don't ever want it to be up, because up just means that somebody's already making money and I'm not sure if they're going to take profits as soon as I decide to enter. So I took off the up because the bouncy ball technically catches things that are on the way back up. So they have dropped, but they had a good day today, right? So all of these technically end in green, but I do any right here. And then, like I said, this price above or below the 200 lets me know how far we've fallen. Like I said, if a price is below the 200, that means it has gone too far, right? And SQQ, I'm glad this actually popped up, because if you did not know, SQQ is a short interest ETF. So when the market goes up, this goes down. So you do need to be alerted of the price movement in SQQQ, because it lets you know whether or not you're going to have a good day or bad day, right? Like if the SQQQ is going down, all right, we're looking to have a great day, right? At least that means this is the inverse of the, let me actually put them next to each other so you can see. Let's go on to Webull. But the SQQ is the inverse to the TQQQ, which is the NASDAQ ETF. So it holds, your Apples, your Microsoft, but SQQQ does not hold those stocks. What it holds is bonds. Okay, so I learned about bonds through these ETFs. If you don't know about SQQQ ETF, there's a bunch of different short ones. There's the SDAO, there's the SQQQ. There's also like the UX or UVXY is also another one. So there's a bunch of, I think, what is this? Yeah, all of these are short-term ETFs. So you can see that these are going down, which is good for the market. Anytime we can see these short ETFs pop up in an oversold type situation, that's good for the market, because in order for us to win, these things have to go down. But the reason why this is the inverse is because it's bonds. Now, when you hear news about bonds, if you hear that rates on bonds, like 10-year yield rates are increasing, that means that this is going to be increasing, right? Because what essentially is happening is that basically when the market is going down, people are looking for bonds to get just a steady return, because the government's going to pay for them. So if the government's like, hey, we're increasing the rates on these, or the yields on these bonds, then this goes up, which brings the market down. Now, as this goes down, that means the interest in these bonds is also decreasing in terms of just the interest to buy them, right? Because in order for this to go up, the market has to crash, right? So let me show you all really quick. Um, Also, too, when you're in Webull, there's this trade window right here. You click this trade one. You can create new dashboards. Like I have one that's just for one thing I want to look at, right? And I can come in here and trade the options really quick. While I'm looking at the options, I can view a small little graph right here. So I can be like, all right, is now the time? Okay, buy. But I come in here and I will create like watch lists, windows, and customize this. And then you can click this widget settings to add the different widgets that you want, right? So I can click, whether I want a new chart, the options graph, a price ladder. I can actually put a trade window in here where I can trade, but I can already trade by clicking on the screen here. So I can say new order. If I'm buying options, I do that from my phone. You can do it in here, but I really don't, I don't like trading options unless I can see the graph, and I can't see the graph for the options on desktop. Do we have any questions so far? Because I feel like I'm just kind of like moving through all of this, but I want to make sure you all are getting it. Everybody's got it? Cool. So let's look at the SQQ and the TQQ. Well, let's look at 1 hour. Oh, while I'm on this, let me talk about this as well. Extended hours. This is extremely important. These little gray bars, how it shows extended hours. I want you all to know that that affects what you can see when you're trading. Let me minimize this. So in Webull, you can turn this on and off here, okay? Extended hours off, it changes the way your data can be seen, okay? If I turn it on, the readings for the indicators are gonna be different, all right? And you're seeing more, like, let me pull up something that actually has some weird movements in, yeah, like this. You don't want data to be messing you up right here, because notice how, let me do a 15 minutes so you can see how to jank up. Like whatever somebody did right here, force this indicator to be like all jacked up right here. And that will mess up the data that you have. Because what's going on in extended hours is like crazy price movement. Sometimes big hedge funds and institutions will be selling back and forth between each other at ridiculous prices. Like maybe they'll buy high and sell low, and just to kind of mess up algorithms and different indicators. So make sure that when you're trading during the day that you turn off extended hours, because that data will mess up how your indicators are feeding you information. And so, yeah, just make sure you're keeping up with that and turning that off when you're trading during the day. Like if you want to see what's going on while extended hours are happening, by all means use it. Like when I'm leading up to the market, I want to know, okay, like I said too, this is another example of how starting down in the day actually helps you to move up, right? Like if Amazon had started up, it would have come down, right? But because VWAP was saying, no, you're being forced down, this created the beautiful opportunity for this to bounce back up at open. So that's another example of, you'd rather start down. Like if you're up, if it's starting up for you, you need to be very careful, because it's only a matter of time before people want to start selling and taking profits, right? Especially anybody that maybe had a swing and they were swinging a call option. Well, yeah, if I opened up, I want to be able to get out of this position and sell for a profit, right? But if you're opening down, this gives me another opportunity to buy some more. Like as a call person, I'm not scared here. Like you just gave me another opportunity to increase my profits and leverage in my position before I have to freak out and sell because we were up before. So extended hours, I'm getting a little distracted. Let me go back to my point at hand. So SQQ and the TQQ. These are the exact opposites. You can see that this same thing going on right here It's the same thing going on right here, right? We had a big gain, we had a big loss, okay? So it is so important for you all to keep up with SQQQ, all right? And the cool thing about it is when this thing starts getting down to like, you know, $9 or $8, it has to reverse, which means that the market has to reverse, right? So if this, let's see, let's go down to 4 hours. So it hasn't had a nice jump up, but even when it did, let's see what day that was on the 8th. Or yeah, this is the 8th. So what happened on the 8th? So yeah, all right. See, when this goes up, the market goes down. Okay. So it is so important for you all to watch this, because if I get a notification and I'm holding a call position on anything in the S&P or the NASDAQ, okay, and I get up and it says, hey, the SQQ is up 1 or almost 2% right now. Well, I need to go ahead and let go of my position. Okay. If I woke up with a call position, I need to let it go because this is increasing in value. Okay. So this is going to be the inverse. Before you enter a trade that's in the NASDAQ or the S&P 500, you need to come looking at what's going on with this particular, and it goes for the Dow too, because there's the S Dow and the Dow Jones. I don't really look at this one that much because I don't really trade like industry. I'm mostly tech. I just trade like tech stocks. But same thing here. The Dow Jones has been slipping and this has been increasing, right? So this lets you know how the market is going to react just by following these short interest stocks. Okay, so I really wanted to show that. I'm glad the screen Finviz pulled this up because it's important to know what's going on. But the key was to show you the screener and how to really find positions. You can also change your current volume to any. But know that we want volume over 1 million. But if you're using this in pre-market, I remember Kim had reached out one time and asked me why anything wasn't popping up after the filter she put in. It's because the volumes here, right? So if you are, this is live information. This does not stick. So if you see something in these charts, make sure you go write it down. Because for any reason, any of these indicators or fundamentals changed the next time that you come to look at these screeners, it's not going to be there. So next time we look at this, SQQ may not be in here. AT&T may not be in here. So this is constantly changing. That's why I always recommend, and I'm always pulling up Finviz, because this is giving us live information, right? And whatever type of patterns that you look for, go back and look at whatever stock you were on and find out what type of pattern it had. Was it oversold when I entered in the position? Okay, well, I like oversold positions because I feel like I have less risk there. Right now, you can't go so far into oversold because these are extreme positions right here. These are like, this stock might just be dead, right? Especially in these types of positions, but it can always bounce back from there. It could have just had a really bad day, but I want to know when it's entering into the range of oversold. Now, if you like buying puts, you can come and look at overbought type of situations, right? And find out what has been running too far into the highs, what's at all-time highs. Now, another cool one is the 20-day high or low. This is actually really cool because what you can do with this, let's say that, you know, maybe I don't want to use these type of simple day moving averages, right? I can just say any. Okay, I don't want to find anything that fell, but what I actually want, let me take off oversold too, because I'm gonna break this down raw for you all. Now, number one, these are in highest volume. When you first click over to here and you click optional, they're going to be sorted in volume. If they aren't, you can go to overview and click volume, because I don't care about any of this other stuff. I want volume. Okay, so click on charts. It'll let us see the charts. Now, these are going to be the stocks with the most volume. Okay, now if they are also having the most volume, I guarantee you these same stocks will be on bar charts, most active options. So let's look at the top 5. options, Apple, AMC, Tesla, NEO, Wish. And then we go back to here, same thing here. I don't know where Tesla is, but Tesla may not have the volume that it needs, but it's always going to be high in options volume just because people know how to trade Tesla. It's actually a pretty easy trade. You just got to have the money to play. So this is one of the coolest little things right here, the 20-day high or low. So when I first started trading, I used to just kind of go and just find things that fell 10 or 20% from their highs because I knew that that's a guaranteed opportunity for me to buy stocks or shares or maybe even options if I feel comfortable from the low or from the high. So in this case, the 20-day high or low, give me something that's 20% or more below its most recent high, right? Because that's 20 days ago. So what it then gives me is things that recently jumped and had a spike, but they retraced from there. Right. So if you like these type of plays, you can come in and look for these types of things, or you can even add it as a new criteria. And then you can do something with 10%, right? It just lessens the, I guess the percentage of gain that you can get overall. Because personally, I think in a stock, I kind of want this 20% below the most recent high of 20 days, because that gives me the opportunity to get 20% out of whatever I'm investing in, if I trust it, right? That's just one of the criteria that I thought really helped. And then after that, you can come in and say, okay, well, I want the price below the 20, right? Because that's letting me know it's fallen. And then I want the price below the 50, because that lets me know it fell even further, right? And then you can say, all right, this is the ultimate decision, whether it's gone too far and it's below, or it's just above and you're about to either catch a bounce or it's already bounced, right? So you can say above. I actually bought Playboy today because I saw an alert, but then I saw it pop up on this screener, right? So I bought Playboy today and got 5% just on the stock. And this is another one that still pops into this 20-day low, right? So if I know that something's 20% down from its most recent high, I'm like, cool, I'll go buy some shares. You know what I'm saying? Because if you drop some more, if I I already feel comfortable in the position that I'm going to be buying. I've already charted it. I've looked at it. It feels good. And I'll move on it. But using these criteria helps you find good positions that you prefer, right? Because you don't have to trade like I trade. I'll catch things that are falling. There's a little bit of risk in that because they can fall more. But what I'm confident in doing is averaging down when they do fall, or just putting a stop loss. Like Apple today, I gained some cash, put a stop loss, it sold. I got an alert that Apple moved down again. So I went in, saw that my option that I had previously paid, $1 and sold for like $1.30. I saw that option, right? Now that option was, I only had to pay like 75 cents on the premium, when I already knew that earlier today, I bought that same option at $1 premium and made money on it. So now that it's down at 70 cents or wherever it was in premium, I'm willing to buy more and take more risk from here. So anytime you kind of, use these criteria, just know that you're accepting whatever risk you're comfortable with, right? Like I prefer oversold positions on RSI because that means that, all right, you've gone a little too far and you've got to come back from here at some point. And then there's even patterns, like I said, if you like trend line resistances or a double top or wedge, this is a whole different, I don't really use these because I like patterns. I respect patterns, but I do not trade patterns because I feel like at the end of anybody explaining a pattern, they still say, this could go up or down from here, especially when you see like a squeeze. It's like, yeah, there's going to be some movement coming, but it could go up or down. But harping back on this SQQQ, folks, make sure that you are paying attention to these. I'm actually going to show you my watch list for shorts, so you all can kind of just kind of take a look at what I watch. It's not a lot. You know what I mean? I just want to watch the NASDAQ, the Dow, And also the VIX is the volatility. Okay. This is important because when this rises, is basically saying the volatility is increasing. Now, when it reaches points like 20, that's when things get all shaky and rocky. And when this goes up, the market's not doing good. Like, let's actually go back to the trade window and I'll show you how these kind of work. So let's go back and what is the VIX? Is VIX cool? All right, we'll look at the VIX with this. So we're gonna put it on 1 hour. Now, okay, so they don't even have pre and post market for the VIX, but let's look at what happened on the 10th for the VIX. Okay, so the VIX went down on the 10th, or yeah, right here on the 10th, it went down, showing that there was a decrease in volatility. Okay, that means that people aren't just pushing prices left and right. There's no real crazy. It's like the fear meter, right? Like when this goes up, fear is increasing. Okay, when this goes down, volatility is decreasing. There's a lot more, I guess, structure to the market. But when this goes up, that means that market, it increases the volatility, which essentially is the range. Like broken down, volatility just means range in the stock market. So when the volatility goes up, that means that there's this crazy range where some things could go parabolic and some things could just hit rock bottom, right? So on a day where the volatility decreased on the 10th, right, we saw a push up in the market. All right, this is the NASDAQ. And then on that same day on the 10th, we saw the SQQQ go down. That's why I say it's so important for you all to watch these things, because on a day where you're holding a call position and you have a notification now that says the SQQQ just dropped 3% and the VIX just dropped 2%, right? Okay, I'm confident. I'm not getting scared. I'm not looking to run, right? But if I come in and it's like, yo, the VIX is increasing, and what happened on the 8th? So yeah, the VIX is increasing and your SQQ is increasing. So on the 8th, what happened on the 8th? It went down, right? And this is the market, folks. This isn't just your stock, right? The whole market ETF dropped, let's see, 3 points right here. So you definitely want to keep these in mind and always in your peripheral when trading, because it's going to tell you also too when things can reverse, because these also have price limits and points of support and resistance that they respect, right? So once the VIX goes down, there is going to be a point at which it has to come back up, right? Just to respect technicals. So that's why I say a lot of times we can already be almost like these sort of market psychics. That's why you have some people too that can kind of like almost be like these market gurus that say they know these things, but essentially they're just watching short ETFs or they're watching the futures because there's also, I don't know where I keep the futures. I think it's under indexes. I want to show you all my indexes too. So the futures is just basically it's what people talk about pre and post market. It's like the futures are flat, or the NASDAQ futures is looking good, but even in there, you can put that into TradingView, right? Let's do TradingView. And if you want to look at futures, what you do is you come and open up TradingView, and then there's going to be where you click the stocks to enter it right here at the top to the left. Click here, and you can click on futures right here. So let's delete that. And your futures will be right here. Right, so this is going to be your S&P futures, your NASDAQ futures, and I can come in here and I can gauge whether or not the market's going to have a good or bad day based on where this is going, right? So the market's having a good day because we bounced off of this support right here, and we've got some area to run until we get some rejection right here. And this is just based on cheat code. Right now, if I come in here and cheat codes like NASDAQ futures looking to sell, right, then I know we're going to have some bad days. And that's essentially what we had. I guess this was Friday. the futures was going down, just kind of resetting and putting a lot of things in buying positions more than anything. But always watch the futures, just to kind of, because when this needs to reverse, the market's going to reverse. Excuse me. So let's go back to Webull. And then also when you're looking at not only the short ETFs, look at the sectors, right? Because you've got communication, XLC. This is a communications ETF. And you can look at the holdings just to see like if there's anything you trade in here. Maybe there's AT&T. Oh yeah, AT&T, T-Mobile, probably Verizon's in here somewhere, Disney. So if you like communication type stocks like social media or AT&T, because AT&T has had some nice runs in terms of options. I don't trade it anymore, but if XLC is going down, then inadvertently these have to go down with it, right? And the only ones that may stick out, maybe like Facebook will have a good day and T-Mobile and AT&T are going down, right? But that's why I say look up these ETFs. I found these ETFs just from using the ETF database that I showed on the last video. I'll just kind of, it's excuse me, etfdb.com. And then you go to tools and search ETF stock exposure tools. So I can be like, I don't know, tell me what, ETFs hold Tesla, right? Okay, here it is right here. Now, these SPDR are the ones that I really follow because they're like sector oriented. And so I can come in here and you can save, once you do your little reverse ETF search, go through, make sure this ETF is worth your time to watch, like ARKK. This is one that we've gone over before and the holdings are worth me watching. So I come in here and I watch them, right? So that way, if I want to invest in marijuana, right, I'll come over here and be like, well, what's the marijuana ETF doing, right? Because that's essentially going to tell me how people are feeling about it. And I don't know if y'all noticed recently too, when we were talking about bar chart, how the weed stocks actually had low put call ratios. And then over this week, we can see, let's go to a weed ETF. Well, let's look at Tilray. I mean, over the last week or so, even Tilray had some good days. Let's see, let's go down today. So when we were looking at it last week, it was probably down in this area and it had a low put call ratio, right? All during this time, a low put call ratio. And you're still looking at, $17 over here, right? And here's a little run up to 21. It got as high as 23. Why? Because there was a low put call ratio. There was nobody leveraging against these. They had been sitting just down here waiting for a little minute and had a little run up without resistance, right? Because we saw that there was a low put call ratio. But again, I still watch ETFs, right? This is a cannabis ETF. So this is going to tell me when the industry and all things in the holding. Because you want to make sure that whatever's in the holding is worth watching, right? So I can see that this holds some names that are credible in the weed industry, and it's worth watching for me because if this is having a bad day, then I can assume that the rest of the weed is going to, right? So all of this weed is really kind of in red or not even large profits, right? So watching these ETFs and indexes are so important if you're going to trade, because I want to know before I get into a position, how is the rest of the sector or the industry doing? So there was one today. Let's see. There's a bank one that I watch. Let's see. Global. Oh, this is social media. This one's a good one. So if you like trading Snapchat, Twitter, stuff like that, you can come and you can see that, okay, like the sector as a whole is doing good and I feel good on my bet on Facebook or whatever you decide to trade, right? So these ETFs will help you gauge almost just like the sentiment gauge for whatever industry you're trading. That's why I say don't just limit yourself to like, I'm gonna trade NEO. Okay, I'm just gonna watch NEO. But no, like, all right, if you're gonna watch NEO, watch Tesla. And then find out what ETFs are in Tesla, because let's actually take a look at that. let's look at NEO, because I brought up that one time. I don't think Tesla will have the same trajectory, because I think it had a little pullback, but it's close. But still, like it's important for us to watch these. Let's here as well. So you can see that all of these essentially have the same trajectory, right? NEO can't do good unless Tesla's doing good, vice versa. And then ARKK can't do good unless Tesla's doing decent, right? So always kind of gauge before I jump into a position. I want to gauge what's going on with the ETFs and indexes as well as the whole market, because this net inflow is going to tell me a lot of information too. Notice this increase in buying right here, an inflow, right? And this is the NASDAQ. So this is going to be our tech stocks. So I always come in and watch these things because it's going to tell me how people are reacting. Because I can see why the NASDAQ shot up like that, because there was more people willing to buy and put money into it, right? So this was no surprise, because I saw that once we kind of gotten a little bit out of this little area and we start making our way here, I'm more confident. Well, one, if I'm holding a put, I know to let it go. Okay, don't try to hold it. If you see this going up, that's more people coming in to put money in. Okay, so, and that's the overall market as well. Now, the New York Stock Exchange is more like, I guess, just a play of all of them. It's just kind of giving you what happened between all of them and the input that's coming in. But the NASDAQ was the tech related. So I always watch this inflow. And notice how it changes after 9:32. I don't know if people have kind of taken notice to this, but before 9:30, 9:30 Central for me, it would be 10:30 per the market's time. So what's happening is from that first hour, right? Because this 8 o'clock, or really it starts at 8:30. So options open up, 8:30 is happening, a whole bunch of crazy stuff. And then what happens is, boom, the reality of the market starts to set in. Now, by the time we get to 8:30, we can see this reversal in direction, just simply based off like all this little morning first hour rush. And I really don't like that first hour unless I'm confident about it. And I'm catching this first burst. And that's why y'all see me selling within minutes, because I don't want to get caught up in this, right? But then I'm more comfortable with coming back in to gauge what's going on with the market after that first hour, because it's like all the jitters and fear and all the novice traders trying to think that they jumped in on something at the right time. All of this can get out of the way. Right. And then I want to come in for a smooth day after that, either looking for what I'm going to trade later in the day or go ahead and stake a position here. But I'm not trying to trade in all of this. Okay. Because what happens is people start going to lunch. Not much is going on. And then literally we came right back to this same position that we started right here. That's why at this time, I'm either going to go ahead and take a position or try to find out what's going to happen for the remainder of the day, because you don't have to trade in this area. Right. This is all lunchtime. Nothing's going on. Even look how it just kind of flatlined. Right. And then after that, people came back from lunch and was like, okay, my position did good. I'll sell. Right. And then right in that last hour, folks come in. So we get the highest volumes here and here. So either you're going to go up or down here. And if you're going up, it's going to reverse at 9:30 and steady out. And then you'll find out what it'll do at 2. But this first hour and the last hour are the most active hours of trade. So any trading going on down here, you could potentially be losing money in your options, because when a stock starts to consolidate in price, that option begins to lose intrinsic value. So there's a lot of value that gets pumped into it based on demand. And if the demand is not there or decides to go flat, you start losing money in your position, just because it's like, well, the demand isn't here anymore. And so this is no longer valuable, because once you get a signal for something, you'll notice that the actual value will start increasing. So before I get off this call, I wanted to go over what helps me kind of find things to trade. And that's my Twitter. So I only follow and have notifications for certain accounts. This guy's decent. He don't really post too much decent guy though, good quotes and stuff, you know, good for mindset. This guy's good for mindset. Unusual Wells, this is like my plug, but I don't take every trade. I take trades that I'm comfortable with. Like if I see something in here, if it's like, hey, you know, something like it told me, what did I trade last week? I don't know, but it told me on one trade. Oh, the one I actually had this morning, which was Viacom. I made like, you know, 85 bucks on like something I just paid a couple bucks for, like 30 or 40 bucks. But it popped up on here, and Viacom had fallen so much. It was almost like a gimme, really. I didn't second guess when the alert came. It was like VOC, yeah, this. So the alert came in. And let's see, let me break this down to an hour so we can see last week. So yeah, I think when I had bought it, it was on Friday. So yeah, I think the alert, it came in maybe around here, and I just came in and bought it because I was like, well, dang, this thing did fall from pretty far. I mean, if you look at big picture, I was like, well, I'm pretty comfortable here. Hold on, let me minimize this. But yeah, looking at where it was, I was like, cool, I'll buy an option call right here. I don't mind that. We so low. I mean, yeah, no problem, right? And then I could see also that this momentum had changed directions. And then we were starting to kind of see this little dip up. And I can't even believe, y'all, that I bought something here and literally made, and I only bought one because I wasn't trying to, I mean, I'm really frugal. I mean, I'm only willing to risk that 30 or 40 bucks that I was spending on it, to be honest, with any trade, because I wasn't trying to put a stop loss on it. I was just like ready to lose the 30 or 40 if that's what it's going to be. But I looked at it at the end of the day, and I think by, let's see, 14th, we were here. So just in this little movement, I think I made 30, 40 bucks on that. Right. And then just in what we had today, it finished me out at like 80 something dollars in profit off of something that I got from just following this tweet. Right. So there's a lot of great trades from Unusual Wells. Unusual Wells is also a website and app. It's one of the apps that I put in my links page. So I recommend it. I used to pay for it, but I don't find it. Once I started to realize that I can make money off of his tweets, I was like, I'm not going to pay you. You know what I mean? Like, it was like what I was paying for too kind of gave me the heads up. Like you get the alert before Twitter. But a lot of times with options, it goes back and forth. Let's see, alerts, option alerts. See, yeah, like on the options alert, it'll say like only premium members can see these. But it's cool, G, because you're going to tweet it in just a minute, you know? So you can't see it at first, but if you follow the Twitter and turn on the notifications for the Twitter, you can get these alerts. Stockhoot is really good. It's also a good app because Stockhoot, what it will do is be like, hey, NVIDIA just did the death cross on MACD. And I'm like, okay, well, I know that MACD's been printing off money for folks, and I know that it's at a high, and if it just did the death cross, then I need to be looking to short this, okay? Stockhoot's really good. The street, obviously, it's just good to know the news. But the person that beats that, the street and news is, this guy's good, PSK. I don't really know his name, but it's all these little numbers and stuff. But he's good for charting for you. Okay, this guy's going to be like, hey, we just got RSI oversold here. Hey, let me actually pull up his profile so you can see what he's doing. It's pretty cool. He kind of breaks it down for you. He'll be like, hey, I see support here. He does news as well, but in the mornings he'll be like, let's see. All right, here we go. So like he'll actually break these down and be like, hey, I'm looking at the weekly. It looks like a strong chart. It could move higher. These are, I think, on Sunday when he starts putting out these type of things. But hey, like I've been checking out the Docu Daily. What a move post earnings, still has room to go here. So you can at least be like, okay, I need to go look at Dash. I need to go look at Docu sign, and you can do your own charting. Right? I don't follow all these people's trades. I use them as guidance so I don't have to do all the work because they're doing it. The whole key, you know, when you see somebody's trading setup and they have all those windows loaded up, it's because you have to have multiple eyes. And the best way that I can do that is having these accounts that I follow. So Unusual Whales is great. Who else is in here? Hedge Eye is decent. Jim Cramer, obviously. But I don't listen to these things. I just use them so I know when to sell, because we buy the rumors, sell the news. So if Jim Cramer starts to post something, or the street, or CNBC's Fast Money, I'm selling. Okay. I don't hold when they start posting it, because at that point it's just like you get all those retail people to kind of give you 1 or 2 more%, and then big hedge funds and big um, funds just start selling and taking profits. Now, this guy is the key. All right, Delta One. It's hard to find his profile. I don't know why. If you type in Delta One, he doesn't come up. But if you can't find him, just scroll through my followers. But he's really good with posting news before it comes. So I don't know how this guy gets all these news stuff, but he's pretty legit. He's great for news. So if I'm in a position and then he posts some good news on it, I'm trying to go ahead and take my profits, or he could give me the news I needed that could be pushing my my particular position up. This guy's good for charting as well. I really don't follow his trades. I just he's just another guy that can kind of feed you some information. Cheddar Flow is key. Cheddar Flow is it's actually like an options flow like software. I don't use it, never had it. I just follow the tweets. They come here and already put the information out here for you. I don't know why they give it away like that, but it's already telling me where the unusual option is. So not only can you get it here, right? So it'd be like, hey, all this money's going into calls, money going into call, money going to calls. Dark pool prints are basically prints that they're orders that don't go on the main market because it would affect the price. So what happens is they go on what they call like a dark pool print, which is like a private market. It's an order you put in that then gets brought to the market in increments. So anytime that you look at a ticker and it's like a whole bunch of orders for 1 or 100 will come in, like 100 blocks, or 1,000 blocks, blocks. It's these orders being fulfilled in small blocks. So when you see call sweep or a call block, it's like basically these dark pool prints are coming in and fulfilling the orders without affecting the overall market. But these people can say, I want to buy this much at this price and this quantity, right? And they can lock in that price, but over time the order will get fulfilled so that it does not affect the overall market. Because if somebody just straight up came in and bought 379,000 shares, it would completely affect the market. Right. And I've actually seen this guy right here, this Ripster guy. I keep following him because it's actually cool. One time a position he got in started losing, and he intentionally went and bought 10,000 shares so his followers could get their money back on their options. So I thought that was actually really cool. So I follow him because he's a stand-up guy, but it gets kind of drama filled sometimes because he really does care about his perception and stuff. And so he gets all emotional sometimes, but I just keep following him because he does the due diligence for you. But that kind of wraps up really the resources I use. Unusual Whales, Walter Bloomberg, really great for news. And then that P2K guy, Cheddar Flow, crucial. Stock Hoot, you got to get the app too. Cool. Well, I'll kind of break all of these down, the tools that I use and where I get this information and all of this. I'll break them down in another page that I'm creating so you all can access that information as well. So any questions, what we've gone over, I really just kind of wanted to make this about like resources and tools that you all can use to guide you along the trade so that you can be more confident when you find the positions you want. Any questions? Let me see here. Where can I see?
So, question in regards to like live trades, as in like maybe something is dropping, like news came through about a stock dropping like 5 or 2%. Does the Finviz, does that show like a live market numbers during the daytime when the market is open?
Well, yes. So it's showing live data as in, yeah, Yes, as in if I were to come in here and pre-market and say I want the current volume at 1 million, it's not going to show me anything because nobody has the current volume at 1 million. You see what I'm saying? So the data in here is real time. So if you were to come in here and you put current volume at 1 million at the open, there's going to be nobody there, right? And even and the data is live in the sense that the next time you look at this, it's only going to be based on what's current then, right? So if in a day somebody's became less profitable, and then it would come up here, right? So it is live data. Now the chart isn't going to be as live as Webull or TradingView, but it is live data, but it's not going to be moving live, right? It's not like if I click on one of these charts, I can then go trade off of one of these things. It's only going to show me what happened at this particular time, right? So like whatever they have it up to, that's all you got, right? But it's live data, as in when you come in pre-market, it's probably not going to be anything, especially if you put the volume restrictions and stuff like that. So it is live. It is live, but you can't come in here and trade off of these charts. But during the day, you can come in and let's say, for instance, that maybe a stock went oversold this morning, but now it's not oversold anymore. Those type of changes, you would have to come in the morning and find that oversold, right? It's not going to be here for you at the end of the day because it's no longer oversold, right? So that's why I say, if you can't find anything, make sure you adjust these, or maybe you find too much and you want to narrow it down some more, start adjusting these, right? So you can come in and say, okay, I want it to be overbought or oversold, right? Or I want it to have a gap up. What has been, or a gap down, right? What has fallen so much that literally it opened up so low the next day. You know, when you look at what happened to things like Playboy and other stocks like that, that just dropped off, right? So you can look for gap downs. The change from the open, like, hey, from open it went up or it went down, right? And like I said too, this is going to help you too. You can even say, hey, it's 10% or more above the low, right? These things have hit a low and they're starting to make their way back up, right? And these lows are based on a 20-day high or low, or a 50-day high or low, or you can say this 52, right? You can say this thing has fallen low, all-time lows, and we're just coming back from those lows, right? 10% below the low or above the lows. 52. Oh, this is the 52. So this isn't all-time, but it's this year's, right? So you can, like I said, there's so many different, and I put it on all because you can break them down if you'd rather look at it like this: fundamentals, technicals. But I want to see all of them because I want to know how it affects. Because I can also do it in industries, right? Sectors. If I want to just do technology and tech, then it'll just narrow this down to chip stocks and, HP, so whatever you like, I guarantee you there's a tab in here that you can adjust it to find what you need to be looking for. As well as the more you learn beyond what I'm teaching right now, you can apply it to this, right? Because like I said, I'm not a fundamental trader, so I'm not here to teach you all how to read a balance sheet, right? But if that's what you look for, I have a lot of one-on-ones that I have where people are like, yo, I look at the balance sheet, man, and I found this one and the balance sheet looks good. Okay, cool. Well, if you want to find some more like that and you understand it, we'll come in and start messing with these fundamentals, right? So now you've learned what you would like in a company, right? Well, come on, drop it in here, right? I can't tell you the first thing about any of these. The only reason why I knew this meant profitable or not profitable because I saw it on a video on YouTube for screeners, right? And not all companies have to be profitable for them to rise in price. I mean, if you look at Tesla's balance sheet, it's trash, but people are willing to pay the price for it, right? So this is live data, and you can change it so as you please. So if there's too much, know that you can add more criteria to sort of funnel. and really pinpoint what you want to trade. Because like I said, these settings right here are only based on my preference. Okay, this is how I trade. I want things that are optionable, right? Because I trade options, and I want things to either be over sold or in the positions that I want them in terms of the moving averages, because I know how stocks are affected with these moving averages. But if you trade patterns as well, they're in here, right? So if you're familiar with head and shoulders or wedge up or wedge down and, things like that, you can come in and change that as well. Go ahead.
I'm sorry. Can you hear me?
Yep.
Oh, so I'm sorry. I didn't know you could.
Oh, it's all good. So did that answer your question?
Yeah, because like pretty much like I work from home, so like, and there's, I don't know, there's this like, I guess the reason why I was asking is there's usually this function that I know you can add it on TD Ameritrade because I use TD Ameritrade, but there's this function on other platforms where you can see the tickers, and by looking at the tickers, you can see, like, you can separate them to where you can see the high gainers and the losers for the day, but like it's like live in real time. But I don't have it on Thinkorswim. I tried to look for it, I couldn't find it.
Oh. Okay, yeah. I think Thinkorswim. I have Thinkorswim, or I had it when I began. It was a little too overwhelming. It wasn't like that, like user friendly. But there's like an area at the bottom left that kind of has like these different watch lists. But I don't use it. I don't even
see those watch lists I know about, but I'm talking like real.
So like real. Here's a couple things for you. So Finviz does that where it's live, right? So you got a couple options here, and I'll show you all of them. So Finviz, if you go to the home page, because that page only pops up because I have it bookmarked as the screener in my settings. So this is what you're looking for, right? But not only this, I mean, you can click on one of these and I'm sure it gives you a list. Let's see. Gives you, it even breaks them down, gives you all the information you need, but I don't really like the look of that. There's one for TradingView as well. So TradingView, that's why I say like get as many, because when I first started, I was like, I don't need TradingView, I don't even, I just need Robinhood, and then people were like, no, dude, for real, you got to get serious about trading. And so then I got put on Webull. And then when I got Webull, I was like, I definitely don't need TradingView. But then once I had to get TradingView in order to have cheat code, I realized how many tools were in here as well. Because when you look at TradingView, click this little fire right here. And this is going to create your little hot list. And you can change these. So you can say, hey, I want to see the volume gainers for today, right? Well, it's already going to be the first one. This first one's going to be your volume gainers. But you can say, hey, I want to see the biggest percent range losers. Like these have lost this much money in the range of, how much they're losing. Or you can say the percentage change, right? And then this will break down the actual percentages and say, hey, ATXY is 28% down. If you like catching falling knives and this looks like a decent position, right? Like you do your due diligence and you can come in here. Now, I didn't use these as much as I use this because like I say, the most important, I feel like, thing that's going to move a stock is volume, right? So I want to watch volume gainers. So what will happen is I'll come in here pre-market and be like, all right, bet, why is Apple high volume? Oh, okay, we just broke through this area right here of, this is on a 5 minute. Let me do something kind of shows it a little better. So on Apple, we can see here that Apple broke through this level right here. And I mean, look how clean this line is of how it just took off from here. Horizontal. Look at this. We can see that there's some resistance right here because of all of this, right? Boom, all these little candles and wicks pushing their way up. And only these two wicks pushed over. So I know that this price right here, this 127, is pushing us down, right? Now look at where this thing took off, right? Now we started down here. We got some lows down here. Now what essentially happened in this candle was we opened here, closed here, but we opened and almost like this was like me when I bought my put, right? It had a low of 127 literally, oh my God, you couldn't have asked for a better. Look at that low of 127 right here up at the top. Low of 127. It literally bounced off 127 and took off. Right. So why was there volume getting in it? Because they knew they were breaking over this 127 resistance right here. And like I said, anytime we break over resistance, y'all, everybody that's buying from here on knows that they have support from all these people. Anybody that's still holding is here to support anybody that would like to continue their push from here. Because I know that all these people have been trying to fight for this position, right? So I know that anytime you enter over this, you have more leverage below you. So this old resistance comes new support. So the next time Apple falls, it'll come to 127 before it'll come back down, right? And so, yeah, you can use this. This is another tool. You can change these, like I said. And then we have Webull. Now, Webull also has screeners where you can come in and say, I want something oversold, right? Or I want the hottest stocks, right? Or I want one of these types of, patterns, right? MACD golden cross. This means that it was down and it's coming back. So let's look at why it's saying that. So look at this, right? The MACD, I guess it signaled the golden cross right here, but then it got rejected. So, if you like using screeners, they have them here as well. And you can set these to any, settings you want in terms of market cap or price or EPS. So is it profitable? Is it not? Also, you can say, what are the analysts saying? I want buys and strong buys, and then it'll narrow that down for you. So the cool thing about these, when you save these, this will be a running watch list for you. You can even create a watch list off of it, but what it'll do is it will be in the back of your settings for your screeners. So like my screeners, I have these screeners. So anytime I want oversold buys, hey, I can come look at this. And they already have these in here: high market value U.S. stocks, high dividend yield bank stocks. But I created these, and notice how I don't have to go fishing for too much, right? It's going to give me 4 stocks, and I can just go in and I can look at these and chart these and see if it's worth my interest, right? And so I have the market cap set, and then I have a certain volume that I want, right? So this is a way that you can have a continuous feed, right? Because Finviz is going to be something that you have to come in and you got to look for, right? It's not just going to feed you your results, because in Webull, even on your mobile, it's going to have, like on your little explore page, it's going to be like, hey, we got 4 new stocks for you in your screener for KDJ oversold, right? But not only that, you have the markets window. And so when I first started trading, I would literally just trade off of most active. And I'd be like, I just come in at 3 o'clock in the morning. Cause back then it was like Sundial and like Nokia and like all of that would always be up here. And Sundial was like 25 cents, right? So I would come in and I'd be like, okay, Sundial's got the most active volume. I'll come in. And if the chart looked good, let's say I came in and looked at Senseonics, and on the day it had most active right here, right on 6/4, it had a 219 million volume. Heck, old me, I would have just bought this, right? You got that much volume and we down here, screw it, I'll buy it. And look what happens. Boom, you run up, right? But I don't trade like that anymore because I feel like, this thing could have gone the other way, right? But I know how to read indicators and stuff like this. So you can see right here, the 200 EMA is support. That's why I say these lines are so crucial, you all, okay? You have to plot these lines, because when you're like, how far is this going to fall? It's right here, right? If you don't have this on the screen, you over here just kind of trading off of price action, I guess. And that's still not bad. But what if it happens to come back towards this line and I don't know if it's going to hold that line, right? I can at least have this EMA to support me to say that, okay, you're actually making a good decision here, right? So if I came in on this day where it got all this volume and I noticed that we were moving back above these EMAs right here, and notice how these EMAs started to cross each other too, right? So they're coming and it's bouncing off and now it's heading back up, right? So you can come in and use the screeners or the markets for this most active. And then, like I said, you can do the highs and the lows. You know, you want something that's at a new high or at a new low, right? Or near its low, right? Because obviously these are always going to get some green, because near its low means that it either bounced off of it or it's still heading there. Okay. So near its high, these are going to be red because people are taking profits, right? Now, new high, obviously new lows are going to be red and new highs are going to be green. But when you're near the high, that means that people are starting to get weak, right? Like I'm getting closer and closer to where I need to be taking profits, and I'm going to do that. And near lows, like I said, you're bouncing back or you're heading there. So just depending on how you trade and what you're looking for, short positions, you know, with puts, or you're looking for calls and gains, you know, top losers, you can play here, top gainers, right? So, and then what's cool, you can break it even down within the last 5 minutes. Who was the most active or the top gainers in the last 5 minutes, right? So who's moving right now, right? Well, who moved in the day? So these lists are everywhere on almost just about every platform, depending on how you want it to be fed to you, right? So you can look at it based on like very detailed criteria from fundamentals to technical on screen, Finviz. On Webull, sky's the limit. Webull will literally give you an IPO like right here. It's going to tell you, hey, these have been listed. If you want to find some new stocks to get on, right? These have been filed, so get ready, right? And these are things that are either being direct listed or they've got offerings coming up. So all of that information is here for you as well as a calendar for earnings, dividends, and splits, right? So if you didn't know about the Tesla Apple split, it would have been listed here for you to know. Okay, so when stock splits come, this is a place where you can come and see, okay, can I win on this split, right? Dividends, you're looking for dividend stocks, it's going to tell you how much you're going to get paid per share that you own, right? So I love Webull, and I know a lot of people can't trade on Webull because of where you actually may be, but it's still a great thing to have because you don't even have to log in, right? So if I go to webull.com, everybody can see this page. Okay. So whether you can log in or sign up or whatever, even if you can't do that, you can always click trade. All right. So you may not be able to access all the information that you need and that we can see and we access and that we use on these calls. You may not be able to see all of that, but you still are able to come in here, use these indicators, chart, also get the market list and stuff like that. This stuff is not hidden from you. You can get news, you can get all of these charts as well and lists. Because like I said, when I first started and I didn't know a single thing, y'all, this was all I looked at right here, most active volume. I'm like, cool, if you read over here and you got high volume, I'm gonna see if I can take you a little ride up from here. I mean, it was a lot easier last year though, so I don't really trade like that anymore. And I wouldn't suggest you all doing that either because volume just means you can go either way. So what I'm trying to teach you all is to figure out which way we're going to go and where you have the best opportunity of less risk, not none, but less, right? And you can be more confident in the position you're in and not so much emotionally attached to the position where you don't know when to exit or add on to your position, right? So just kind of recapping what we went over, the short indexes are key, you all. Make sure you take note of these. There's not many, like I said, you don't have to watch all of them. There is a lot. If you actually go to markets, it will pop up in hot ETFs on bad days, right? And you can see the short ones here in the red. So if you need help finding more ETFs, you can always go look under hot ETFs. There's a little option for Webull. But as far as mine, let's go back to this shorts SDAO, the Pro Shorts ETF as well. Don't watch this one as much, but it is one that a lot of call or put options will come into, and it'll let me know which direction I need to be in. And the SQQQ is crucial, especially if you're trading tech stocks, right? Because this is the inverse of us. Apple, Microsoft, all of that is doing good because this is going down, right? Now, notice where this, what are we looking at a day? Okay, now look now. we had some lows on this here thing over here. So at some point, the market's going to have to give back, because that means we're at highs, right? Yeah, because we're at the inverse, right? Which means that at some point, the market's going to have to give this back, okay? Notice this now. Now, that don't mean tomorrow. That don't mean this week. But at some point, this is too high and this is too low. And I done made some money on this SQQQ, but you got to time it right. You got to time it when it's like this, right? And then this joker does one of these little $16 runs, because you can buy this call option for like the 12 call option or something, and then boom, it'll run up to 16, and that's printing. You know, these are the type of options that will go from 5 cents to like 30 or 40 cents, which is a lot better growth if you can buy more. Because if I can buy 10 contracts at 5 cents, that's only $50. And if all of those can run up to be worth 30 something, then, you know, you just turn 50 into $300, right? So you have to time this right though, and you have to be patient. Really what you want to be waiting for is the TQQ to be exhausted. And how you do that is looking at the holdings, y'all. You got to watch these holdings, right? So if you look at my trade window, my watch list, basically, I'm watching Apple, Microsoft, SPY, TQQ, right? Because I know all of these run together, right? So if I'm gonna watch these, I'm gonna watch them together. If I'm gonna trade Apple, well, I want to know what the market's doing too, because the market's getting picked up by this VWAP. I'm done betting against Apple. Okay, at this point, I should have bought a call, right? Just to see that the whole index it's in is being supported with the VWAP. Right, so the SPY got pushed down. Why? Well, Tesla, I gotta have in here somewhere. I'll put Tesla right here so you can see what was going on. So if you wanted to buy a call on Tesla, you could have at least seen that you weren't going to go anywhere just based on this, right? Because it's being pushed down, right? So I always suggest watching several things together. So that you can gauge in a sector or an industry, or just the general direction and support that you have in whatever you're investing in. So the ETFs, and what else did we go over? Bar chart, always a must. Come under most active options. When you go to bar chart, like I said, just click on options. And it's more than just the options thing. You can type in any stock and it'll give you a whole bunch of information, but I use most active options as well as unusual options volume. Most active options, unusual options volume, and option volume leaders is one I haven't really honed on in, but it will tell you the strike price. Okay, so if you're like, I don't know what strike price, here it is. This is the most, like Apple 130 call is the most active option in the entire market today, which means that of course Apple's going to break over 130. Everybody's willing to bet on it. Okay, so if you're wondering why Apple did it, here it is. It's a whole bunch of calls. Everybody was supporting this. This was me right here trying to get this put up in here, you know, just trying to make a little bit of money. But option volume leaders is cool because it'll at least tell you which strike price you need to be buying and the expiration date. Okay, so on Thursdays, since we're not going to be meeting, I want you all to come in on Thursday, come and look at most active options. This is going to be an assignment for everybody on Thursday because I want you to find your stock in here. All right. Now, number one, you all need to be keeping up with whatever you're trading. So if you trade Apple, you need to be marking this number every day. So today is 30, maybe tomorrow it'll be 32 because more people are like, Apple can't stay here. Right, so this put call ratio could increase or it could go down. If it goes down, Apple can run. If it goes up, Apple's got some resistance, right? And last time we talked, I believe Tesla was probably in the 80s or the 1 or something. And you can see that we broke through that, made it up here to 617. Now we've got less resistance, but there's still some. All right. So on Thursday, I want you all to come in here, come look at this list. All right. Now, what you're going to do is you're going to say, okay, I'm trading Apple. All right. Now click on Apple and it's going to pull up this page. When you're to this page, go to put call ratios on the side under options. Okay. Now on Thursday, we're going to be 1 day to expiration. Okay. This is the days till expiration. This is going to be 1. okay? Because we're gonna have it's gonna be 6/17 and we got 1 day. Okay, now this is going to be an exercise for you all. Whatever stock you're trading, just come in and take a look at this. Preferably the most active because it's going to have the most volume to move. But since Apple's number one, we're going to look at Apple. And on that day, when it's 1 day left, you want to look at how much leverage is in each one of these. Okay, because if there's a lot of leverage in calls, then Apple can expect to go down on Friday because these people have to make their money. Okay. Now, if all of these call open interest sell by Thursday, then Apple can just stay where it is, right? But if Apple's got 1 day to expiration for all of these contracts, and there's a lot of calls, way more calls than puts, right? Then the stock price has to go down because these people want to make money. And at some point they got to make money. Right. So Apple stock price is going to go down just simply based off there's 400,000 more positions open than there were puts. And these people are going to let go and lose some money, or they might just hold all the way till Friday to make some money back. Right. But we don't know that until Thursday. Thursday is going to be the ultimate like dagger and be like, OK, did everybody go ahead and cleanse these positions before Friday, or a Friday have we just ran it all the way up and then we got to collapse on Friday? So on Thursdays, like I said, come in, look at it, click on put call ratios. It'll break it down per week and let you know and this is telling you how that week's going to be, right? And you can even look in the future. If you look at, let's see, September, what's going on down here? So it's got a low put call ratio. This is people knowing that the stock is going to fall before this date, and then it'll come back up by then. So it's going to be more calls on this. I'm not sure why they're so early, but still you can get the sentiment of how people feel about positions based on the open interest of puts and calls. And on Fridays, because there's only 1 day to expiration, there's a lot of lotteries in the weeklies because they're almost valueless. But if you can catch one that's right at the money, and then it's like goes from like valueless to like in the money and now it's worth something, those are the lottos that I hit. That's how I'll make like that, couple $100 in a few minutes on a Friday, right? Because like most of these contracts have lost their value. And if they can end in the money by the end of the day, then they increase in value exponentially. So it becomes like this like lottery. But Thursday, let this be you all's homework to come in, take a look at these and see how it reacts, right? So you can come in and say, oh, well, there's more puts here. Well, these puts have to sell on Friday, right? If that's the case. And then you can come in on Friday and say, well, did it go up or did it go down? And how did these people respond? Because not all of these people actually have to sell or close. They can always exercise, right? So they can end the day holding their position if the stock stays up there. So keep that in mind as well, but definitely pay attention to these things and how they increase and decrease. And then that leverage is going to show you the movement and direction that you're going to make. So hopefully y'all understand that. Everybody's good. No questions. Anybody got any questions?
Oh, I do.
What's up, Kim?
Sorry. I get all messed up. I thought I was muted this time, and all this time I wasn't muted. Yeah, I had a question about, do you, because I know you do options and I really like options. And so I'm trying to really, which I understand more, but do you look at the implied volatility ever?
I used to when I first started trading.
Yeah, or should I just like forget about that?
I wouldn't say forget about it. It just doesn't mean anything to me. Now, when I first started trading, there was like, I feel like, was it the lower it was, the more, like, because there were times when we were being positions that had low volatility, and I feel like we were losing on it, and it would be like going in our favor.
So you do, okay. So I feel like that too, but do you look at, go ahead.
Go ahead.
No, I was going to say, do you look at the other one, which I think is good because it kind of lets you know. I also actually as well do the bar chart, what you do every single day, every stock I look at, what you just covered, everything that you want us to do on Thursday. I do that every day.
Nice. Yeah.
From you. Well, cool. I got it from you though. You're the one who showed us how to do it. It works so well. especially at the end of the week, because I made money on Friday by the lottery, and by looking at out of the money was like, wait, they got to get rid of them, and one had way more than the other, so you can, but no, it was the other one, like, do you look at the probability of it being in the money, like if it's 20%?
Oh,
30%?
now that not so much. That is for people that are looking to exercise options. Okay, so when you look at, like, if you purchase options in Robinhood, it'll be like your break-even point and stuff like that. That is for people that are looking to use this to exercise. Okay.
What do you mean exercise?
Exercise means that you actually want to use the option for the purpose that it is. Okay. So an option broken down is, so we're looking at AMC right now. So let's say I expect AMC to run to $70. Okay. What I can do is I can buy this 57 strike price right here and say that I don't want to spend, because these options they're multiplied these premiums by 100 because it is 100 shares. Okay. So this premium is per share. So you're paying a $7.15 premium per share to ensure the opportunity that you have the option to buy AMC at 57 cents by the strike price of June 18th. Okay. So that means that in case AMC runs to $70 by June 18th, you can still buy it for $57.
What? Wait, you got me so confused right now.
Okay, so
that's what the implied, that's what the probable in the money means?
Well, that's just the broken down of what an option is, right? So the exercising of the option is what you need that not the implied volatility, but the break-even points and stuff like that is applied to those that are looking to exercise, right? So for something like the 57, right, the break-even might be 57.30 for it to be profitable for you to this particular exercise this option. And so exercising the option means that on the date of June 18th, if AMC ran to $70 and you're holding a 57 strike price, number one is going to be up $20. So your $700 just became let's say 40. So now where we at 57. So let's say you hypothetically now have $1,800. Okay. Well, that $1,800 for you is now going to be a discount off of your purchase for 100 shares at $57. Right. Yeah,
I'm completely.
Okay. So
I thought that, okay. So I thought I'm looking because I don't see it there. Oh, here's your implied volume. Okay. So here we go. So your implied volume here at the very end, not implied volume. No, not the implied volume. No, the in the money.
Okay.
You don't have it on your thing though. So you can't. So you can't answer my question.
What's that? The break even and stuff like that.
Well, it's
probability
of it being in the money.
Correct. So, and that's what I was saying. Like that is still for people that want to exercise the option. Okay, because I can still add that on here. I think probability.
Yeah, you can. But I'm saying, do you choose an option based on that when you're purchasing your options?
I already know that probability, right? Like I'm not looking
because of the technicals.
Yes, because like it doesn't matter if that thing told me 20 or 80%. Like if I know Tesla can run to whatever, then I'm going to buy the option, right? Because the probability.
They're just saying probably. We don't know. It could.
Yeah, that's basically saying there's an error. There's like a margin of error.
Same with implied. Implied is the same thing.
The implied volatility, it varies based on which strike price too, right? Because notice that these have lower implied volatility because they're already in the money. So I've noticed that lower implied volatility
is lower. It's like way out of the money.
I bought like a Netflix put one time and it had a low implied volatility and then like literally Netflix was falling and it started going negative. And I was like, what is, and basically that means that there's a reduced range. Okay. Cause like I said earlier, the volatility just means range. Okay. So with your increased implied volatility, that means that the range of your option can move more. Okay.
Okay.
So
Okay,
your implied volatility, if you've got 50% implied volatility, that means that you've got a much smaller range than somebody that has the potential to run up to 341%. Right?
Okay.
So that's just telling you that, like, here's your range.
Right. But it's
then the probability is just saying that in the particular moment that we're in, right? Like something like these would have lower probabilities down here because you're asking for something to go up, right?
Right.
But something right here may have a higher probability,
but
it still may be only, 60 or 70% because there's still a chance that it could move this way. Right. Mm-hmm. Now, these people have a higher probability because it's saying that because of the demand that we see in the price down here, your probability of being in the money by June 18th is extremely high because
they're already in the money.
Correct.
But they're already in the money.
Correct. But there's still the probability that it could reverse. Right. So,
but why would you, if you're already in the money here, why would you just be hanging out there? Wouldn't you have been like, I'm out?
Well, because sometimes you can hold until expiration, right? Because some people
and make more money
here. Yeah. Some people may have a contract here, right? And
right. You're right. Yeah.
They want to, they're so like, let's say it wasn't something like AMC that could actually hold the price, right? Then you could still hold this option and still be making money. That's why people say you buy time, right? These options.
Right. No, I get it. I thought
you're
that
buying
too.
Time to more profits, but that time does not take you away from the value when this price goes up and down, right? Because it's like, yeah, maybe let's look in big picture right here on the day. And notice how I set up my windows, y'all. I'll do these like little minute type trading over here. I got my 1 hour right here so I can see what kind of indicators we got here. And I got my big picture day. So I can see at all sections of the picture, I can see from dissecting it to microscopic to like seeing it on the dish to like being like, okay, big picture, this is what I'm looking at. All right. So notice that. But yeah, in the case of the probability, I don't really focus on it because I'm already.
So what do you, when you're trying to buy when you're buying an option, the thing that you look, the most important thing to you is, of course, you don't want to buy it like way out of the money, which, of course, when I was trading, when I was first learning, I didn't know, you don't know, but now you know, because you end up losing money. So you want to make sure everything's matching up. So what do you basically look for? The volume and then the open interest? Those that matter to you?
I look at those two things. To be honest, those are factors, right? That's when I've done my homework, right? So but like, let's say I'm on the fly right now.
Scalping. Let's say you're scalping. You don't look at any of that.
I got an alert and something was like, yo, you need to buy. Like, and I did this with AMC a couple times, bought a call. I bought the 57 call and that thing took off.
I think I saw that you posted that.
I bought it at and I didn't even really get the total profit.
It was good.
So I bought it it had like dropped down to 5 or something and that thing ran up to $9.
Yeah.
So I came in here and I would literally, now on something like this, I don't really care about the volume because like the volume's already there. Right. And so, I mean, because you could look at all of these, it's like taking right. It's got tens of thousands, at least not in this one, because it had probably been in the money all day. Right. And nobody was really trying to touch that. Because when I bought the 57, it was like right here. And then we ran up to 60 in the middle of the day or something, or like 9 maybe. And that's when I kind of like maxed out the profits on it. But when I come in, I'm just buying in the money. I'm buying this contract right here. Right. Like, I don't even. Like, to be honest with you, I'm like, if it's a high volume, if it's already on the most active volumes list, I don't care which one of these jokers. Like, I'm buying.
So you will buy. So you are not frugal. You're. See, I was thinking, okay, I'm being frugal, so I'm going to buy like a cheaper contract.
Yes,
but you don't win like that. That's like really playing the lottery that way, right?
Oh yeah, you playing the lottery. You gambling. When
and now I understand how the big guys like. The big ones, I hear like somebody will go, oh, I made 100 and I just made 40K. Yeah, but you used 150 grand to do it. So you made 10%, Negro. That's what you made.
Yeah.
Right.
Yeah. That's the crazy thing is when you see these big gains, like I want to see the percentages, and you'll see that they won't show that. They only say
you gotta show the percentages.
made 20K this month.
Yes,
and it's like, yeah, dude, it like 20K might have just been 20%, and a lot of us.
But you could have made 20K if you had more money when you did that AMC move.
Put down on the trade. That's why I said, as traders too, we have to stay focused on our lane.
I know, but you don't get that when you're first trading. You think,
because you're like, I'm gonna turn this 50 5,000 real quick. So what I do is I learned the hard way though, Kim. These contracts out here are even though they're cheaper, because earlier today I
call them hope. They're hopium because you just be hoping and praying.
So just hoping that they go the right way. But the only time you would actually buy these contracts, one, if you had enough time, and two, you knew that the move would be in your favor, right?
Yes.
You knew that when you purchase this, there's no doubt that AMC is getting to 65. If you are uncertain of that, you need to kind of take.
I know.
I mean, you can do it because earlier I had maxed out my trades, because I was buying these trades, right? And they were like 500 and 800 and like different types of stuff. So I had maxed out how many times I could profit off of it, because I ended up having to go trade in Robinhood because
Wait, how come? Why?
So once you max out your spending in terms of cash value,
you
instead of the day trade,
you got to wait for the settle.
Yeah. So I had actually I had like one trade I spent like 600 on, and then another one I dropped like 700 or 500 on this AMC, and that joker just went ham, and it was worth it.
Right, of course.
But after that, after it kind of retraced, what it did was it came back down to, this is when I got back in. It came back down to VWAP. So midday, I ran out of cash funds that it would let me trade for. So I went and came and bought the 64. And the 64 had dropped, and reason why I bought the 64 is because it actually just had like decent volume for out here. Now the 65 probably would have been more advantageous because of all this volume.
Yeah, because I bought more volume
anyway, just because I had like 500 or something left to spend. So I was like, I just want the closest thing that's close to what I can spend. So I bought this, and it ran up like, $30-$40, and I just could only get that before it came back down. So a stop loss took me out of this trade because it's right back to where I bought it. Right. So that's why I was saying these trades can be, going sideways, because this was the only chance I had to make money on that. Right. Mm-hmm. But if I'm at 56, right, we had a chance. This thing dropped down to 55. If you brought the 56 call, you can just hold it.
Yep.
You ain't got to run.
Right.
So that's why I buy in the money, because people don't realize that when Friday comes, all of this is going to be worthless.
It's done. I realize that's how I've been. Yeah. So I'm getting that. So it's just like, okay, for me, I'm not dropping $700 on a contract, even if I know, because I'm not there yet. So I just have to find cheaper options.
And just be careful with the cheaper options, because
they don't pay as
you're
good,
taking more risks out here.
Yeah, and then
and if anything, if you're going to be forced to buy these, then don't trade this, right? You this in for you, or trade it only when it gets to these sort of limits that you may be looking for, like when it dropped down to 42 or 41, you can come in and buy one of these 50 or something dollar strike prices because you were down here, right? We were down here messing around, and you can reach out here because you realize it'll come to this. Okay.
Right.
So you would only be going out of the money when you realize that you've fallen very far, and that it'll come back. Like Alibaba, I'm gonna go look at Alibaba.
Right. Like if somehow it fell, but you knew it was going to come back up, you're out of the money, but it really isn't your fault. But don't just pick out of. Yeah. But a lot of people, I'm going to be honest with you, that's another thing that a lot of people that teach, or they don't really go into detail. And that's a very important thing. Like options has some stuff that you need to know, and they don't really say all that. Like I learned more from you. I don't know. I just think that,
I
it's
appreciate it,
misleading. It's misleading too.
Yeah.
And, it discourages people unnecessarily. If they know, the more you know, the more you're equipped to succeed.
Yeah, people have got to definitely understand the basics of options, because even notice this spread right here, right? These are going by 250 increments. Okay, that is very significant. That's why these people are losing money on a day that the actual price went up, right? So the stock went up, and these folks are making money, right? That's why I say if you right here, we making money because our probability isn't that low. Right.
Exactly.
But when you start reaching out here, yeah, it's 48 cents, but now you losing money. It's like, yeah, it's $33, but yeah, you losing money.
But here's the thing: it's $33 that you ain't gonna have because you're about to lose.
Yeah, because you just bought the wrong contract, right?
And I've been the queen of that.
I had to get over that hump though of like spending more for contracts though. But when you start moving aggressive up here, right, just make sure that you are buying it at the right time. Like you don't want to just come in and start chasing this, because these
and like
move
you
very
said,
fast. Because once it crosses over here, you need to let it go, because at this point it's going to be like supersonic value, right? Because now it's actually worth something
that I don't do because of you, and it's just helped me tremendously. And I set alarms, and also I don't buy. I just buy at the bottom too, because you don't know. It could go higher, and even if you look at the chart, you could, like, I can think, I really think this can go higher, and it may, but it could also drop. But when it's all the way at the bottom, you kind of have a better chance because it's only going to go up.
Yeah. Yeah.
Right.
Yeah.
So that, I think that helps a lot. It's helped me a lot.
Take a look at Baba, right? I bought shares of Baba because we were at this sort of lower position.
Yeah, Baba's coming back up.
Yeah, so if you look at what Baba did today, notice the volume in calls compared to the volume in puts. Okay, because people realize I don't need to be betting against this because we're already low. Right now, they are holding positions, which is good because these people got to sell before Friday, which is going to give us even more of a push. I can't believe I just saw this. Look at all these people still holding these puts because they're expecting this. They're expecting the Baba get pushed down here. So eventually we have literally a loaded gun over here of catapulting us out of this area. Right. I mean, I didn't even realize thought about it. Right. Because look at the open interest right here and the volume. So obviously these people aren't necessarily selling, but we're not going to know the difference until tomorrow when the volume goes to zero and this gets updated, right? So because Baba is at this position, because if you look at it big picture, right, Baba has fallen below this support at 220. Now it's in this range now, so it's gone as low as 204, bounce back from there, so it's getting some support at 210 basically, and that's where I entered because I've seen Baba at 210 and then I saw that joker at 300. Right?
I know.
Never again.
I know. Me too.
Never again will that happen to me. So I bought an actual option on Friday and won on that move. Had I held it, I would have made some more money today because this is the move it made, right? But like I said,
you have to be
very cautious about what you're buying because these people lost money today. That's why I always buy in the money, because this spread messed these people up, right? Because that 250 spread means that these people have to work extra hard to get here. Right?
Wait, isn't this at the money?
This is at the money.
At the money. Right? In the money is above it in the shade.
Yep. So this is in
and
the money.
Out of the money.
This is out of money is everything out here. This is all you reaching. This is you reaching. You're saying that I just want cheap and maybe you can come in and buy this for 33 cents right now and then catch this explosive move because it could run to
but it doesn't.
But it'll get resistance at this 220 right here, but it can still, once it breaks that 220, we can see some upward motion, right? But this is a good sign to see this open interest because that means people are still holding on to the leverage that we need to go up, right? So this is looking really good. The momentum's turning back up, and this is the daily. All right, we're looking at a daily and our momentum's turning up. This looks like a continuation, not a cross down, right? This looks like it's about to use this as leverage and come up, and look at our RSI looking healthy. This is looking like textbooks. Now, what we're waiting for now is to get a close above this 20, right? Because right now this 20 is what's pushing us back down. All right, but like when you break this down and dissect it to 4 hours, look at VWAP supporting us. Right? This is all you need right here.
Yeah.
You know, so that's why I wish I could have shown this to you all yesterday, because you would have been able to catch this move, because that's essentially what I was betting on. But we can see that, you know, you might get a little bit of pullback to this little 213 area, maybe even, yeah, this 200 or this 20-day moving is what's going to be really our support on the 4 hour or even lower intervals, because we still have support on the 1 hour. But on the day, we can see that it's our resistance, right? So we can see that we have to cross over this 214. If we break 215, we gone. We gone. Like if we break 215, I might come in and buy the 215 call, right? Just because at that point we're going to be in.
Well, it's not,
But just be patient, because anytime something breaks out, just know it has a little bit of a pullback, especially in the option prices. But this is the type of stuff I look for, right? But this is how you gauge the open interest and volume too, because tomorrow this is going to reset. And then even on bar chart, you can come in and look at BABA and look at the put call ratio, right? And be like, all right, how do people feel about it? All right, more people are buying calls, right? So we know just by this, but the put call ratio is still high, which is even better. Because if technically we're at a low price and the put call ratio is high, that means that this is what drove us down, right? And eventually these people have to let go. Like, yeah, that's just simple math. So,
so if it's, so the way it is right now, where it's more calls, so right now the calls are winning.
Yes, because look at even the call volume. It had
by 100,000.
Just in volume, right? So the put call ratio on the volume is low.
Oh, right, the volume.
Right? The put call interest on the open interest is actually relatively high, considering that you know, that's what drove the price down, right? I mean, something always has to drive the price. That's why I say, even if you don't trade options, you need to figure out why this happened, right? And that's because of this, because people betted against it, because technically this is almost 1-to-1, right? So even though this is about just over 100,000 more calls and then puts, that's even better, because that means that all of these people got to let go, right? Because they
and when they let go, will it go up or down?
Stock goes up,
right? Because they're selling, right?
And that's even you can see that based on the stochastics, right?
Right.
Right. This is directional, and we can see
it's
that
down.
It's
see it? Yes.
Down, right. So this is pointing up, showing us we got room to go up here. We got room. We got plenty of room on MACD. Right.
Yes.
We got plenty of room to run on MACD, because MACD's been
as high as on my watch list.
So yeah, so this is essentially how I just, you know, trade, because I'm looking for these types of positions, right? And I only knew about this because I had alerts set on it. I don't know if it shows my alerts. Yeah, it shows it. So it told me when it broke 220, and I was just waiting on it to get down here, right? So I got alerted on BABA, and when you look at where it is right now, it's prime position, because even had you caught it right here, you could have caught this little run where it ran up to 220 and got rejected from there. And here we are again back in this little range, right? So all of these people bet against it here, and now they're winning. Their puts are making money, but at some point they got to realize that, you know, they have to let go, especially if VWAP is showing us support, right? So what I don't want is for this to keep running up into open, right? I want it to kind of come back down to this 213 and then us float around here, because when that open comes, we can take off, right? But if we keep going on this trajectory, we're going to go down first, right? So keep an eye on this. This is one that I'm definitely paying attention to, because it's below where it usually trades, right? This support, and that was all the sign I needed to let you know that you weak. Right. And BABA is a good stock. So I'm definitely holding some positions in BABA. I don't have any calls. I sold my calls on Friday. I'm always taking profits because I don't want to know what's
Do
going to happen.
you swing ever, or do you always?
Yeah, I accidentally swing traded that Viacom, and that worked out.
Oh, you did? Oh, yeah, it did work out. Yeah.
You know, I had it on Friday, and it got me like $40 on Friday. Didn't even realize I still held it, and then come Monday, it ran all the way up for $80 in profit. So, that was a nice swing trade, but it was only because it was super low, right? Like the stock was already completely collapsed. That's why I say I love these types of positions, because it's like, even if you catch a dead cat bounce, right? That's profits. I think I made like 140 something %, right? So
wow.
Definitely suggest you know, just going in and doing the due diligence to find these types of opportunities. Because if you're buying it right here, right? If you come in, you're like, Baba's on a run, I should get in. Well, that run is clearly going to be stopped right here. Whether you got it, Super Trend is telling you. But once I can see that, oh, we're back at these levels of support right here, I'm willing to take this type of trade, because I know that if it breaks 210, well, we going down, right? And I'll look for a better entry in this area, right? But I know that right now I got this support right here at 210, right? So I'm okay with putting a position right here because all the signs are looking healthy.
Yeah.
But this not closing above this 20 is we needed to close above that, because if it doesn't, but look at what happened even here, right? The last time we were in this exact same position, the next day it opened up. I got to show you this right here. Look at this. We were literally in this same exact position right here, right? Where you're coming in and you're like, man, we're at 210. Should I buy? The next day it opened up at 220. Oh, it had a high of 220. Oh, no, it opened at 223, right? So it literally opened up here and hit a high, right? And that was just the day before. You could have got a little call position, boom, got in here, and then boom, next thing you know, you're in the money right here, right? So this is the type of position that I'm trying to catch right here. I got in on it Friday. So I caught this little trend, and now I'm hoping that this kind of carries up. But I'm just holding the stock, so I just bought a few shares, and I just want to watch it, right? Because you know, if I just hold this and it runs back up to 300, well, cool, appreciate it, you know. So, but in terms of short term, you can always run the options on things like this. But cool. Well, man, that was a rundown. That was a call. So, any other questions before we tap out?
Nope.
Cool beans. Well, I will stop